Sweet. There we go. We'll first go ahead and get started looking back at what we had initially covered the week before. Specifically, what I want to take a look at are VSCO and RBLX, QCOM, the main three that I have in mind right now as far as things that I would like to add to the long term. They're all things or companies that had previously appeared or have been in the long term before they were sold off for one reason or the other. But a lot of them find themselves currently at pretty enticing places within their charts. If you take a look at this area here, the zone that I have highlighted in yellow or gold. This is IPO price, right? So when you take a look at VS CO, this IPO'd back in late 2021. We were very fortunate if you've seen previous videos that we had caught this here on its like third or fourth, yeah, one, two, three, fourth bounce here. Didn't necessarily write it up all the way to the high of this trend, but we got a good amount of it. It sold somewhere here on the retest of the IPO price. So what's very enticing to me is if we pull up our tools here is again, right? We've seen this significant hold now, and we're on the fifth time that it's bounced to these all-time lows. And now looking at overall momentum, if you want to take a look at specific indicators whether it's your MACD on the weekly, I like to pull up the moving averages. And if we do that, one significant thing that I am looking at here, right? Having pulled up the what we have here, the 5, the 10, the 20, the 50, the 100 moving day average. We are, or price is currently sitting right below the 100-day moving average, with the 20 and the 50 stacked on top of it. So over the past, what is this now, like almost 2 weeks, what we've seen is this consolidation in price and potential reversal, right? So that's what I want to take a look at in this next week is the previous week, right? We picked this up because we saw the momentum pushing and we told ourselves there's a slight gap to fill to the downside. But ultimately, if we're to hold this our weekly level here at around 20, or you can call that 2021 exactly, this is my main goal, right? To have price settle above that and build or continue to build consolidation just like it did here before another retest of these trend or previous trend highs. This is very enticing to me because of a few things, right, that we ended up touching on last week. The overall understanding, when you take a look at these experts or those that are evaluating companies, right? There's currently a general understanding that this specific name it's oversold, right? If you take a look at those indicators, whether it's overbought, oversold, this has been ran to the ground essentially since the closing of this past year. So for about 5 going on 6 months now, we've seen a significant downtrend. So this is now consolidation. So determining whether or not consolidation and a reversal is warranted has to do a lot of with the speculation in retail contraction, right, across the board. When you take a look at consumer discretionary names, there's been a contraction. Is this something that the brand itself has? Is it a matter of them having like overextended themselves? Will it be a continued long decline? Or does the restructuring and digital strategies yield additional upside, right? If you take a look at last week's breakdown of this name specifically, we talked about their intention, how they've been repositioning themselves and making sure that they're able to hit their targets that they're aiming for. So they are currently undergoing a restructuring of their marketing and the branding behind the name and the products that they're putting out there. So that to me does potentially signal the opportunity to not necessarily reinvent the whole thing, but at least to find stability within their revenue and the way overall that they are currently marketing the product itself. Overall, this is definitely a high risk, high reward type of opportunity. Any positive news will cause a significant spike, just like it did here, right? Between August 2024 to the end of 2024, about a 4 month run. And this all had to do with things being introduced, right? Like the annual sh fashion show that they usually have. That hadn't been held in about, if I'm not mistaken, 2 or so years. It came back. So the overall anticipation of, well, where is this brand going to be at moving forward, and how does it continue to grow, right? Also understanding that it's only been publicly traded again since what is this, July 2021. So we haven't even gone a full 4 years of this existing within the market itself. So it's something that if you're thinking about those like luxury-ish brands that you think will exist long term, I think this is one of those that will. So to me, buying it around its all-time lows, it's kind of like a no-brainer if you plan to hold this for the long term. But upcoming potential catalyst and the reason why this could be a good momentum opportunity, whether it's a options opportunity or shares opportunity, is upcoming earnings in June. So definitely something to keep an eye out for as they're trying to refigure what their e-commerce branch looks like, their digital footprint looks like, the reduction in their overall workforce, so store closures, moving away from that brick and mortar or not relying on it as heavily. Establishing or expanding brand collaborations has been pretty huge for them. And overall, just the money that they've switched now into their e-commerce growth and the understanding that there's ways that they could initiate cost saving opportunities, right? Because traditionally they had been a brick and mortar business predominantly. So definitely a good one to keep an eye on. My target is still about the $40 mark before or by the end of the year. That's what I would be aiming for. Pretty much the very same trade that I had initially taken here towards the end of 2024 as well. So we'll see what that brings. My goal or my hope would be that we do see that momentum push, but this time that we actually hold up around these levels. And a lot of that will have to do with market sentiment and overall what we find going on with the market, but also the understanding that this drive and then the retracement had to do with the push up into that presidential election, and then what we started to hear early on within those first couple years of the month. That being said, we can go ahead and touch on a very similar name. And I say similar as far as like the reasoning or the type of setup that I was looking for. It's another one of these names that I'm aiming to hold price at around its IPO range, right? Same thing here, the yellow gold zone, it's our IPO medium price. We talked about this last name or last week as far this name last week as far as it needing to hold. And it did open up or it gapped down on Monday, just like the entirety of the market did, but it held significantly better than the majority of them. If you take a look at what they're working on currently, I would say overall sentiment, it's cautious, right? But the fact that they are establishing this sort of momentum, I think overall it does point towards more interest being formed. And this is closely related to its earnings. It's done so well because they've now reported a substantial growth in their overall users on a day-to-day, month-to-month basis, and the overall revenue through their subscription services coming in. And they've done really, really well with their branding and partnerships that they have going on currently, whether it's different artists, things along these lines. So really the monetization is what's currently driving their profitability. So I bring this up because that's what they've had trouble with in the past. We see that this has ran up to around 141.60, right? At its all-time high back in November of 2021. Around this time, what drove it there was in large part one, the overall market sentiment as far as like everything was running around this point in time, right? But the biggest thing is the amount of users that it amassed during this short span is what drove that all-time high run. But then you have to think about what actually pushed it back down, right? And drove it down to what is this almost like a 10x reduction, a little bit less than that, but almost a 10x reduction of what the all-time high was. Um, and the case being that it wasn't profitable. They have tons, millions of users that log in every day, but they weren't finding the best way to actually monetize that user base as far as how their product or how their specific platform worked. And now over the last few years, that's what they've been dedicating their time to is figuring out how do you really get the most out of each individual user, whether it's the ability to buy additional in-game currency, buy certain passes, things along those lines. So that's helped it out a ton. I think that it could outperform a lot of the names within its specific area or sector. And the reason being is that this is essentially it's a mixture of two different or a couple of different areas, right? As far as the way that its business is structured, yes, it's you could take it into consideration with names like who are some of the big video game software developers? I was going to say EA, but that had been bought out by Microsoft like a year or so ago. But essentially, these were like its main competitors, right? But then you also take in mind the subscription base part of it, the fact that the IP or the intellectual property behind it, it's the platform that they've built and the platform that these games are played on. So that's the actual like um the actual value of their business, like we talked about in yesterday's meetings. When you think about where is the actual value or where are they drawing revenue from, it's the platform that they've built and that user base and the data behind that user base. So the business, what it looked like at this point in time, is very different than what it looks like now in current day. Yes, an opportunity was missed to potentially add or buy back in here on this retracement because everybody thought like it was going to keep going a little bit further down, right? A little bit further down, but just take a look at its earnings and how it's been able to now reposition itself. So looking strong relative in consideration with other names, like not only the video game developers, but if you're taking a look at how certain companies are introducing AI, not necessarily as like producing chips and things like these, and the computing power behind that, but as far as making the user interaction a little bit smoother, whether it's through customer support, whether it's through like an in-game guide, things along those lines. They've been a little bit more creative with that. If you take a look again at the earnings report, it beat expectations. And the very important thing and what's driven this bounce back and now potential, it is now a reversal trend, right? It's at that point where the current trend is reversing, where we've had one, two, three, four, five, six, seven. You can even call this an eighth failed breakout here because it raised guidance for the first time in about, if I'm not mistaken, six or so quarters, and that guidance was raised because of that shift that they've seen in not only continued user growth, so adoption of their platform, but really the ability to now monetize each individual user. So that's definitely something that's going to be very big when you take a look at this specific name. Um, though you'll see that they are still reporting certain losses, right? Definitely want to make that clear. And overall, summer is when they see their biggest profit typically, because this is what does summer tell you, or what does summer give its typical user an opportunity to do to make it a little bit easier?
Kids on school holidays, summer holidays.
Right,
No?
exactly, right. So you have more time on the
Yeah.
platform for sure. So it's a no-brainer why if you take a look at all of their quarterly reportings going back to when this IPO'd, it's always been the quarter that encompasses summertime where they've had their biggest revenue influx because there's just naturally more people spending time on the platform. So that's definitely going to be a significant opportunity to keep in mind. Not to say that we're going to just from here on out run all the way up to all-time highs, but it is a potential to consolidate within these areas. My ideal entry would have been at the $50 mark. That's been missed here, but if we can get some sort of retracement back to like between like 70, 75, that would be the sweet spot for me, but also knowing that that might not happen and it might not happen for years, right? If we're able to consolidate here and the company continues to have that opportunity to meet their forward guidance, then we're probably going to consolidate here and just at some point in time aim for those highs. And I just say this because whether we slightly retrace or go up, there's lots of room for growth because it is again a newer company, and this has only been under 4 years in the market. So not even half a decade that it's been publicly traded. So it's one of those that long term, it does definitely have potential with what it does. Now taking a look at, or what one other thing that I'll touch on actually, bringing up the moving averages and talking about momentum, it's all holding, and this is what has been one of the largest shifts, right? We recently created or hit that 100-day, and I say recently, but it's been about a year or so. So the more that this is traded, the greater stability it will have, right? Because there's going to be more long-term investors holding this name. So to me, my first the first thing that I'm looking for is where do we find long-term consolidation? And I think it's going to happen here at these levels right above or within that IPO price. Sweet. Now moving on to um, QCOM or Qualcomm here. Give me a sec to make this a little cleaner. I want to look at this specifically on the 4 hour. I know that I have my weekly pulled up here, but let's go ahead and take all of those off for a second. So the big thing that we touched on last week was this opportunity here. Let's bring up our tools. The understanding that we're just here, right? If we take a look back at the highs of 2022 and how that relates to where price is currently at, we're just consolidating around that neckline. So what I want to see is this something where we're going to keep trending up here and then just reject and see bear flag that back down to this level here, right around the 102. That to me, if you're thinking about a long-term investments, probably the ideal point to wait for if we see strong rejection. But this has to be market wide, right? Because given the strength of semiconductors, unlikely that this sort of retracement happens unless it's market wide, unless it's sector wide. So odds are that we keep inching, we break here, and then we just consolidate back at this neckline. I don't necessarily feel too comfortable aiming for these all-time highs, whether it's in the semiconductor tech in general or really the market when you're taking a look at SPY and Qs in general. We are at all-time highs. And we talked about this maybe 2, 3 weeks ago now when we mentioned that this market is now reaching levels of uncertainty. Like people are now starting to feel a little anxious because you start to think like, oh, I should have bought a month ago. I should have bought 3 months ago. I need to buy something right now because the market is running, right? And that's the cycle that we always run into. But I bring this up because you don't need to rush into those opportunities because something whether it's within tech or one of the other specific sectors, the opportunities are there. But taking a look at Qualcomm specifically, all it did was hold at the neckline, right? Taking a look back here at the weekly, it's the base of that neckline that we talked about right here. It's the base of this, the base, the base, the base. That's what we're looking at when we bring it up here on the 4 hour chart, right? So all it did was consolidate the past 2 weeks there before what is this on Thursday where we had that down day and it filled the gap. And that was the very first thing that we talked about last Sunday was ideally it needs to fill the gap before we get any sort of additional upside because we don't want to run up to the upside and then try to buy in some sort of long-term position there and then have it fill the gap and then have that feeling of, oh man, I could have gotten this like $10 cheaper, right? It's always better to be a little bit patient, especially with what we saw the market doing or the opportunity to find consolidation within these levels. Overall, it's rebounded, right? If you take a look at where we are currently in comparison to this, right? And this double bottom here, it's the same thing that we saw in SPY. It's the same thing that we saw in QQQ. So tech overall, these two bounces here and then the drive up. It's the same exact move, mirror copy of what happened, right? This run up, what day was this? That was the day that we announced the 90-day tariff pause, right? So it's a mirror copy of it. So if you're thinking about how should I be trading or following this specific name, it's going to be just the mirror of SPY, the mirror of tech, the mirror of NVIDIA to an extent, right? And AMD. So it's running very closely to it. What has led me to keep this within my specific watch list is the fact that it's been a huge beneficiary of the movement or the incorporation of certain AI factors within the phone industry specifically, right? Because if you think about its largest business, it's the phone chips that they're largely producing, right? The chips that are found in the iPhones, in the Galaxy phones, predominantly, those are the two biggest ones that they produce the phone chips for. If you're thinking about the Snapdragon chip and the sort of demand that it has for a mobile device, it's the top producer, top player when you're taking a look at that specifically, and that's why it remains relevant within the semiconductor sector as a whole. It did beat its earnings expectations last quarter, and it raised guidance as well. They announced their AI arm based mobile chip this past quarter when they were talking about raising guidance and the reasoning behind that and the new products that they're coming to market with. And overall, the global expansion of 5G network and the certain upgrades that are coming to Android phones specifically. A lot of these are made possible by that Snapdragon chip that they produce. So that's a lot of the reasoning behind why I continue to watch this, not necessarily invested in it long term myself just yet, but it's a good one if you want to catch some of that momentum, whether it's the options contract potential or even just buying shares potentially. Cool. So that was a wrap up of our last week watch list. We'll go ahead and dive into a little bit more of what I'm looking at specifically for this coming week. We have our breakdown levels of SPY, Q, IWM. Then we'll go down into Chewy, which is a pretty good setup that I find interesting. Reminds me a lot of what I was looking for in Roblox and VSCO. We'll go into UPS, Estee Lauderdale as well. These are all potentially beaten down names that find themselves within certain opportunities to potentially find a trend reversal. And that's something that I wanted to hone in, right? And this is what I've been doing for myself throughout the year is building this watch list that you see here based off of different sectors, different names with certain trends that they're experiencing. So we're ready for whatever certain conditions are brought up. We have some names that will perform well within those conditions or will perform bad within certain conditions. And then, so as we build that understanding and build this list out longer, it will be that opportunity to hone in and just know, okay, we talked about this in previous weeks. We have this sort of sentiment. What names were we looking for? What names presented a certain setup that lended itself to those types of sentiments? I just bring this up because that's the whole idea behind building the sort of watch list week over week, right? Just because last week we had VSCO, Roblox, and QCOM, it doesn't mean that this week, because there's three new names being introduced, that those no longer are being watched, right? These are all being watched simultaneously. And we'll go ahead and I'll go ahead and provide my specific targets within the post itself. And I say that because taking a look at, and I mean, you're welcome to take notes as well, but taking a look at our last week performance or the overall price action of what happened on. Let's take a look here. Within SPY, right? This consolidation up here and slight retracement, it's the same thing or at a larger scale of what happened within QCOM, right? We just talked about that earlier. It's the market feeling that uncertainty. If you take a look at the past 2 days, it's been a lot of conversation around what? Do we remember? As we had two things happen. May 22nd, we had FOMC minutes and overall,
Didn't
and I
didn't
yes,
we have the sorry to cut you. Didn't we have the S&P downgrade the like
the credit
your
rating.
credit score, credit rating. Yeah, that's it. Yeah, yeah.
Yeah,
Is that
and
what you're referring to?
yeah,
Yeah.
that
Mm,
definitely what I was going to lead into. That was the big thing,
mm,
right? as far as the concern behind how was the market going to react to that, right? Because we closed up here at around like 593-ish. But then look what happened that day, right? We gapped down significantly and we ran back up. That first half of the day, we went green before the second half of the day coming back down, right? So a lot happened that day, and this whole the last 2 days, it was one the closing of the week, so naturally you see volume die down, but it was also throughout the week it was digesting that information and then piling on that sort of uncertainty, right? As far as so now what we're seeing is a slowing, but resilient market. And I say this because a lot of the market being propped up or the willingness to continue to see influxes at these levels is due to the fact that we've had some softening of data. So when you take a look at the consumer data, yes, a lot of it has kind of slowed down, right? The consumer itself, when you take a look at consumer sentiment reports, it's not as strong. But when you see that, in addition to then when you take a look at the CPI and the PPI reports, these have been cooling. So then the market itself gets a feeling of like, well, what we thought was bad, what we thought was driving inflation and all of these other factors, maybe it's not as bad as we think, right? So then you're essentially getting that pull to both sides, both to the bottom and the top, and overall keeping in the back of our mind that there is some sort of expectations for rate cuts in late 2025, right? So we are now in late 2025. At this point in time, we're transitioning into the second half of the year. And if you take a look at some of the conversation this past week, one of the things that the current president mentioned was he kind of poking fun at Jerome Powell and saying he's always or notoriously or historically been a person to always react late, right? So when you hear somebody say something like that, you get the sense of like, oh, they're trying to push him or they're trying to push the Fed to cut rates sooner rather than later. And if that is a conversation that's being planted into the mind of the market, then if you're trying to push for rate cuts now, would that mean that there's going to be multiple rate cuts, right? Because in the past, when we were first going into this year, it was always the conversation or the expectation that we would probably only see one rate cut this year. So if we do get then multiple rate cuts this year, what does that do for us, right? It gives brings back that interest within the market, more of the risk on mindset, the understanding that or the thought that, well, when again am I going to get this potential rate cut, right? Because the government might not necessarily, or the Fed specifically, continue to cut rates consecutively, right? Because we've had a pause. So definitely lots of questions that are being brought up. Don't necessarily have the answer to those questions myself, but it's something that we just need to pay attention to and see how it plays out within the market. And the big thing that I've noticed in the past week specifically is that no matter the day, whether we gap down in the morning or whether we just bled throughout the morning, we've always seen the day had some sort of or attempt to have some sort of reversal, right? So I bring this up because then you have to think about based off of market sentiment and price action, what type of opportunity are you looking for? right? And that again just brings up the fact that doing this work over the weekend, making sure that your target levels are refined, it's what's going to bring up that opportunity to simply sit there, not necessarily feel anxious or driven to enter something because of a candle being moved, right? You have the opportunity to tell yourself, I'm going to wait until a certain level is reached and I see what price is doing when it reaches that level, right? So again, I'm bringing this up because all I traded last week, if we go a little bit lower, were trend reversal patterns. So if we take a look at when was this? The 19th. So the 19th, that day, I just traded out of this consolidation, right? So we got the run up back. I missed the morning. I didn't necessarily catch the entirety of that gap fill. But what I saw was a drive back up into our weekly zone and a hold. And then I simply just traded a break back out, back up. So that is what completed our gap fill. When we take a look at the next day on Tuesday, we ended up closing um, red, right? But what I simply did was whenever we had significant dips here and on the lower time frames saw volume pick up, just I think this day I had two trades. I just traded the pop back up and then end of day coming back into the zone. That's the same. That's the only thing I did. Very similarly, on Wednesday, what I then looked to do was again, I've missed most mornings, and typically what I've found myself doing this whole year now is that I typically won't be trading anywhere between the first like hour to two. Really, for me, it brings the understanding of where are we finding consolidation, where's momentum going, right? Because you've seen that initial influx of volume. So what I did is I didn't actually enter until I was a little bit above this candle here, but it was the hold, right? The pop, the hold of that high or that newish high of day, and then pop back into this level. I've been very quick with my positions, and these were all specifically futures that were being traded. I don't think I entered a options contract this week because I didn't see the opportunity to. I could have probably played puts based off of the gap down, the initial gap down here, but that didn't necessarily come across my mind at that point in time. But these were all futures to be exact or to be clear. And then I missed this whole drop, right? And that's where the big opportunity was, where in comparison to that Monday where we consolidated and popped up and created that new high of day, we saw consolidation here, failed to break or hold above. So the consolidation this day and fail to break above, that could have brought us confidence to swing a put, right? Because that's exactly what we had here. Just consolidation, hold again, or failed to hold and drop on a big drop like this, based off of where you're seeing momentum go, there's always the opportunity to try to catch a falling knife, right? And that's the risky part of it is that you won't always get that sort of volume up. But very fortunate that on the short term 5 minute chart specifically, was seeing that momentum hold and build. You're touching a weekly level, right? So where it was bleeding, yes, I could have tried to enter a put here at the break below my 4 hour, but it was moving pretty quickly. I didn't want to overextend myself and then get caught in this, right? And lose my accounts or whatever it might be, because this is a significant move when you're taking a look at futures. So I just waited for that test here of the weekly, the snap back up, Told myself I can catch most of this move depending on how far it goes. I didn't think it was going to go that far, or at a worst, I will set my stop loss at a new low of day. But I caught maybe I think like a 6 point move on this, and that was my day. Very similarly, the next day did not catch that first 2 hours. All I did was hear consolidation. If you take a look at the chat, there was a point in time where I went down about like I think it was like 250, but it held here. And this consolidation was significant to me because it was the lows that it had held the previous day there, right? So that's what made me comfortable holding here is that I see it holding and testing those lows. So at least it's telling me there's some sort of interest there. Because as we keep touching those levels, it keeps getting snapped up. So it was a simple just momentum trade back to the upside. I think I ended my day there. What I was looking at then on Friday is if you bring back this level across, when we gap down and I saw this about the first like hour and a half, the momentum building up, my first thought was if we build momentum, we're probably going to come to test this, right? Because again, it's where buyer interest was. So either buyer interest is going to show up there again, or being that we gap down, the interest is not going to be there and we're going to reject. Right. These are, I'm just bringing these things up to kind of give you an understanding of my own thought process and why I might be aiming for certain things. But just like I said, initially seeing that momentum build up, I felt comfortable taking a long position within my futures accounts to hopefully test this. I did not get to catch the entire run up, but I got this candle here and I got this pop of the candle there, and then I had to call it a day based off of the work that I had to get done. But that's just to give you a general understanding, right? And futures won't open up today at 3 p.m. Pacific Standard Time like they usually do. So I won't necessarily have a strong outlook at what I'm aiming for until tomorrow around 3 p.m. when those futures open up, as far as where just having an understanding of where SPY or where the market might open up tomorrow, right? But just given the understanding of how price action went, I'm going to give myself an initial range to look for, right? If we go ahead and open up above this 582.50 mark, then what I'm looking for, I'm probably not going to touch it until we test this weekly level at around 584, 584.50. And I want to see a break and hold. If we're breaking, I need to see significant volume, right, flowing into it in order to enter right at the break. If I don't see a significant influx of volume building that momentum as it breaks, I want to have a 15-minute candle closure above that and then see if we start to build or consolidate above that weekly level in order to enter a position to then reach for 587.82. Or if you don't want to, if you want to set yourself like more refined targets, what would you aim for? Just seeing previous price action. You aim for previous day highs, right? Like you see here, you aim for areas of consolidation, like you see here. So, I mean, that's the same thing you see there. So, if you want like a general, like quick take profit, if you're just day trading, if you want the non-greedy target, right? Because I know that a lot of the times we want the big hit, but this is what you're aiming for, right? If you're trading momentum, scalp, whatever it might be, you're looking for a break above 584 and then simply a move to around 586. So about a dollar 50 move there. And I mean, when you're trading futures, that's more than enough. If you're trading an options contract, it just comes down to, are you looking to swing? right? Are you looking to just do a scalp, day trade, whatever it might be? That's going to play a role for sure in your overall PTs. But this is your first area of profit take. You then have the 4 hour level there. If you want to take a look at your potential midway point before you get to the weekly level, then you're definitely aiming for this area here. So that'd be your third area of interest there on SPY, right? Around essentially it's 589.50 between 560 there, or 590 is what I meant to say. That's the third area of interest. If we're looking at the upside, right? If we're taking into consideration a potential move to the downside or any sort of retracement, this is how I'm playing it, right? This is what I have in mind. We'll first start with the gap down scenario. So let's say that we end up, okay. So why am I highlighting this area here? The white area there. What does that tell us? It might be here. You can keep this into consideration. I think this is probably the better one to have. It's the midway point of the last trading day, right? So if you take the lows of here of open and then the high, this zone or this area here, whether you mark it there or slightly below there, that's the midway point. So that's what you want to see, right? When you're talking about like an inside day, you want to see a break. So overall, what I want to see on Tuesday is, are we breaking above Friday's high, signaling a green upward momentum day, or are we breaking below Friday's low of day and signaling further downward momentum, right? So I say this because at those point in times, that's when I'm trying to consider or determine if I'm potentially going to swing something, right? If I see momentum building and we break above that high and hold right around midday, then it could be pretty enticing to pick up some sort of potential swing position into like mid-June to late June. But if we're in the same, okay, there we are. Looks like we lost connection. Let me bring this back up here. Sweet. We should still be recording. Sorry about that. So we'll just keep going here. So essentially that's what I'm looking for, right? If we open up above that high of day, these are my levels. If we are opening below the low of day, I'm a little bit less inclined to want to enter the positions. That I have in mind, but essentially we're looking for the gap fill, right? And I say that because I wouldn't want to get stuck in what we've seen happen where we retrace and then just bounce back up the rest of the day. But if we do break below 575 here, we're going to fill that gap. So that's the main thing that I want you all to keep in mind when it comes to the potential downside of SPY, is that that's going to be the large opportunity. If we break below this weekly here, I'm thinking gap fill. So that's at that point in time. I'm actually aiming for probably when we're talking about contract wise, I'm looking at 570s, which are going to be the most expensive ones. And just go by fives, right? Your 565s, your 560s, and so forth. But if you want to take a look at a really good contract and you are like pretty sure or confident in that we'll see the gap fill here, to around 566. It's the 560 contract. If you take a look at what they're currently sitting at, let's go ahead and take a look. And I would do it for, give me the day again. I think it's 529, right? Or 530 would be our last day. So I would either look at the 530s here, or ideally what I would look for, what I've been aiming for is like the 13s or the sixths here. Let's go ahead. Why isn't it giving me, or is it because it's not my active account? Oh, there we go. I want all of them. So we're taking a look at the 560s for the June 6th. They're on the $300 mark, so they are pretty pricey. If you're taking a look at 530 for there we go. Yeah, they're 122. So that's probably what I would be aiming for if you're looking at just like a week's contract. Those are going to be fairly good, right? Well, depending also where we open, because if we do open on the lower end of things, see, these are already up 70, or they were up 75-ish percent at the end of Friday. So knowing that, depending on where we open up, these could be closer to like 200, 225 by the time that 575-ish mark hits. So you just want to pay close attention to those, but I'd be looking probably at the 560-ish, even the 555 contract, not necessarily thinking like, oh, it's going to fill or it's going to go in the money, just looking for that volatility, right? And the potential to get that IV influx into it. Because if you do see that sort of move, if we do gap down, likely that the 555s are going to be the ones that are going to be priced around 122. And there's potential there to probably, if we do start to inch towards that gap fill, what's going to happen is that everyone's going to have that mindset, right? Everyone's going to think, hey, it's going to gap fill and you're going to see that influx. So if we're able to get really good positioning on it, you're easily going to get 100% play there. I would honestly aim for even just 30%. And that's typically what I'm aiming for when I'm trading a weekly contract, is anywhere within like the 25 to 30%. Like that's already profit take area. So definitely keep those specific things in mind. And that's just what that's what I feel comfortable telling you all, right? But if we're talking about like trading within the day, if we open up within this range or this range, very, very likely, right, that we might not necessarily gap up above the high of day or gap below the low of day. We might just open up within this range. So if that's the case, what I'm looking for is either a break below that midway point of day to enter those puts early on and hope that it just slices to do that weekly. But what could happen is that it could drop, test the weekly, and then launch back up and close at up here at the end of the day, right? Or even higher. So those are things to keep in mind. And the inverse, what could happen is that it holds this midway point and we break here, reject, it holds the top of our weekly zone, and then we pump into the end of the day up to this weekly, right? So these are all things that you potential scenarios that you want to keep in mind. I know I'm not necessarily listing like specific levels for you just yet, but all of that will be posted within our weekly post in the group if you want to have like these specific ranges for yourself. But I hope that that breakdown helps give you a general idea of like my own thought process and what I would potentially be looking at when it comes to some of the specific options contracts or just the opportunities within a potential futures trade. Do you have any questions? Cool. Awesome stuff. We'll go ahead and move on to Q's. It's the mirror copy of SPY, right? No, nothing um much else going on here other than the fact that it's the tech heavy ETF, so it's going to move with those tech giants. So that's what you want to take a look at closely. This will probably see larger moves when it's directly affecting Qs, whether it's to the upside or the downside. So that's why a lot of people prefer to trade either Qs or NQ if you're looking at futures, because you do get larger or more significant moves with the tech companies specifically. I don't necessarily feel the need to trade Qs too much because I'm always, for the most part, in a SPY contract. So it's the same thing to me. But we keep track of it because it tells us how tech is doing, and that's definitely a big part of it, right? This yellow golden zone that you see down here, that's the gap fill. So this is where the low of the 19th, if I'm not mistaken, and then this is the previous high before we had that gap up. So potential, what is this about? $1.50, about a $3 potential gap to the downside there. If you're looking at Qs, I would probably wait for a break below here. This zone here, probably what I'm aiming for. Yeah, a break up below 507, I think is what would signal more downside momentum within tech. So a break below that level would probably be a sweet early-ish, middle-ish entry point for a potential gap fill to the downside, which would be a great, great move. Now moving on to IWM specifically, it's been I don't want to say the weaker, but it's been the slower one of all of these, right? And it always tends to be with the understanding that it's small caps. And if you take a look at even the further back, right, the weekly um, action that we're seeing here. Again, what did we touch on last week and our during our quarterly breakdown and everything that we've done? It is the fact that all it's doing is finding resistance within this here. And what was this? This was about like a 3-year consolidation, right? So if you bring that across the board here, all it's doing is finding consolidation there again. So we'll see how long we spend around these levels. I mean, it has more upside potential than you would see in like SPY and Qs, but it's also not companies that encompass those types of large moves, right? Like your tech companies and so forth. So if you're thinking about leaps, long-term investments, just the overall potential of it, we're either going to come back up and test that 220 level by the end of the year, or if you take a look at 1, 2, 3, 4, 5, right? And that, what is that? Take a look at this area. That is the previous high before COVID closures. So this is the whole COVID drop, right? Before it ran up. That's the previous high, and that's all we're seeing here, this consolidation there. So if we don't hold here, we could start inching back towards that 2019 high. So we'll see. We'll see, but lots of thoughts behind that. Typically, IWM or the Russell 2000, it's not a large mover. It's where you see an influx when there's market uncertainty, given that it doesn't have these huge swings or that it holds companies that tend to be a little bit more stable, some in healthcare, some of those insurers, things along those lines. And below, before I bring that up, just taking a look at the overall momentum here, right? What is happening, or what I found interesting is that this candle is holding right at the 100-day moving average, and it's being squeezed into that 100-day and the 50-day moving average. So the 50-day here for me is this green one that I'm hovering right over. So you're essentially just at the mid, or you tested a break of that midway point, which is where the previous week candle here had closed. So very interesting to me. If we do hold this, then I would be hopeful that we break back into or hold within that area that we had previously seen that 3-year consolidation. So just things to keep in mind when it comes to small caps in the Russell 2000. All right, now we start getting into the bulk of the single names, right? That we are introducing for this week. I want to give us a full view here of the Chewy chart. Very similarly to Roblox and the Victoria's Secret setup is the fact that this name also IPO'd about 5 years ago now, or maybe we're on the sixth year. Yeah, I put 2019, so it's seen a few more years than those previous names. But what is happening is that it is right at the IPO price, right? This initial candle, the body of it, this is the medium or the average price within that IPO week. So we've historically seen this hit, hold it, reject it throughout time, right? Rejection there, but now we're building momentum again, and you can see we hit lows right around or right below the $15 mark. We're double that at this point in time. We hit those lows back a year ago is when we've hit those lows. So if you're taking a look at, you might be wondering, well, why are we looking at a Chewy, right? Or what does this company even do? For us that don't know, it sells pet products, right? This is something that I think is very substantial, or that it's a company that's well worth considering because of the fact that just typically pet owners like to take care of their pets, right? That's why they have them. You want to extend their life, you want to give them a good quality of life at that. So they're always going to have a customer base. And initially, the big ramp up that we saw as the entirety of the market ran back in 2020, 2021, a lot of it had to do with the fact that its business model, again, like many others, turned into a subscription service predominantly. So this is where they introduced the opportunity for buyers to have like recurring purchases where they would send like a tailored meal plan for the pet depending on whatever specific needs they had. You can pick and choose different types of food. It include like a toy here and there. So it was like a variety pack type of subscription service that they introduced, and this had their subscriber base rise. So it grew significantly, and that's what drove it. But also not the understanding of how to necessarily make that completely profitable is what drove it down as the market one lost interest and lost steam, and overall this downturn that we had into the late 2022s, it got affected by that. It wasn't meeting its projected revenue because they weren't monetizing that subscriber base accordingly or properly. So this specific company, it's seen as like mixed retail, right? It has been under pressure as far as figuring out how do you really make this a profitable brand. But what we've seen was about a year or so consolidation. You can even call it like a 2 year long consolidation here, where they've had to reimagine a lot of how they approach the subscriber or the subscription based side of their business. Pet spending overall, if you take a look at the statistics behind it, remains relatively stable, especially within recessions, right? So the way that I think about this specifically is very similar to the way that I look at Procter and Gamble, the way that I look at Heinz, right, or Kraft, the way that I look at your General Mills, the way that I would look at a like a Coke or a Pepsi. To me, it's somewhat recession proof because no matter what, like we stated earlier, is pet owners are always going to want to purchase for their pets, whether it's the food that they need or the toys and accessories and things like these. So that's never necessarily going away yet. Yes, people might feel some sort of restriction, but they're always going to continue to purchase, right? Margins have been squeezed by inflation. That's definitely a big thing to keep in mind. And overall, the shipping costs of these things. And that's what affected it greatly when it was predominantly relying on that subscription model. Was the overall cost of shipping these things out and the minute and that limiting the overall net profit that this company had. When I take a look at this specific chart, I know that in others we talked about the fact that it is at IPO price, and when you take a look at the range from 120 to the low of about $15, if you pull out other things like your fib levels, right? Your Fibonacci levels, you're looking at a chart that is what's it doing? It's reversing the trend, right? It's gone through its upcycle, its attempt of consolidation, its down cycle consolidation, and now it's potentially trending back up to an upcycle. So it's a reversion of the trend or a reversion back to the mean is the potential that I'm looking for. So potential to squeeze back up to the midway point of this downward trend, right? So if you take a look at the midway point, where does that sit? Right around here. I'll go ahead and switch that to gold. So it's potentially a move back around to the 60, 62-ish dollar mark there that I would be aiming for. I feel really comfortable picking it up at these prices because again, it's hovering right around, right above IPO price. So it's telling you that those people that bought them from the beginning, they're still break even, slightly positive on their position, at least those that have held right and didn't sell here at all-time highs. Lots of opportunity here just looking at it on the technical side of things. If you want some additional catalyst or reasoning behind my interest in this, is that as we go into June, what is this company doing? Like many others, it's reporting their earnings. So I'm looking for margin recovery, reduction in the overall amount of debt that they had occurred as they were trying to figure out their business modeling and things like that. So definitely looking very closely at these factors that we've been discussing the past 7 weeks and even the past week and two specifically. The subscription model and auto ship growth acceleration has helped a ton. So what I mean, or when the market says auto ship, if you haven't noticed, it's something that I first noticed Amazon start doing about a year and a half ago with its products. So whenever you buy anything like mouthwash, like toothpaste, like day-to-day supplies, what they give you an option to do now is if you set it up as a recurring purchase every 1 month, 2 months, 3 months, they'll give you some sort of discount, right? So it's kind of like a you subscribe for it now and forget, and it'll just keep sending it to you. And that's something that Chewy introduced as well, the auto ship or continuous subscription type model where it's trying to entice you to buy in bulk with a discount, but in reality, how much is that discount, right? That's just always my question when I purchase things along those lines. But since they started to introduce that type of like bulk purchase and not so much the tailored meal plan purchase that they had before, they started to again see a rise in their overall consumer base or their total subscriber count, if you will. Overall, this sector it's seeing a rebound across the whole sector when you're thinking or looking at consumer discretionary. Specifically. So same thing or idea behind the Victoria's Secret trade, right? That there's been a more of an influx or willingness on the consumer side to continue to spend. Taking a look now at UPS specifically, this is one that we broke down. I want to say this was maybe like November. I last touched this chart back in November of 2024. I have not done anything since we initially touched that chart, but it's one that's just been sitting here on the list, and it's getting very, very interesting for me. If you take a look at it, see all of these notes, everything that we touched on has been or was back in November 2024. So this was our outlook at the end of last year for 2025. The first thing we talked about was a bounce at these levels, which was a breakout of 2020. If we see a bounce, a trade into 134 to 139. That did not happen, right? It's continued to bleed. A break below 123 could potentially can bring a significant spill into pre-COVID all-time highs at around 104, 101. And that's exactly what it did. So our second theory or hypothesis there is what has played out, and that's the opportunity that we initially missed because I didn't really keep track of it as I should have. What was here the big break and even the retest of it, and the failure to break back above 123 and come back down below. So Kano, if you watch this video, this is one of the names that actually broke down with you when we broke down AMD and I Intel. It was this and forgive me, but there were two other names that we had touched on. And what I said is that we could continue to see a slow decline that follows the 2 year longward downtrend, right? So this is the downward trend here that we are following. And every time we've tried to revert back to it, we've ran into some sort of consolidation. And I'm gonna bring it down lower because I'm really interested in seeing how tight this specific trend goes. So in order to start to think about a reversal to the upside, I want higher highs, right, to form. So I want those steps to the upside, that consolidation to build. And I said it here, if not, continue to short as trend follows, right? Because every time, again, if we haven't seen this clearly enough, retest, break below, retest, break, retest, or rejection, right? You get the pump, rejection, pump, rejection, pump, rejection, pump, rejection, pump, rejection, pump, rejection, pump, rejection. So right here, if we're building a base and we come back up, I think we base here and we retest here. So I'm really interested in this and seeing how long of a consolidation we experience here. And is that providing us true momentum or true consolidation to potentially retest this? And again, it could just be a retest and drop further below again, right? But very interesting name to keep in mind currently if you want a better understanding of what these levels are specifically to take a look at this, right? So this upper level here, this was 2021 breakout all-time high. So 2021 was the first time that we reached this zone here. This area here, I had listed it as untested area since COVID 2020 breakdown. So that's why I was inclined to include here the break below 123 could signify this because at that point in time, right, when we were charting this at the end of 2024 here in November, we had not built any consolidation here. These are literally the only candles, the part of this candle and part of this candle that had seen any sort of price action or significant price action within those levels, right? So to me, between 104 to 123, these are areas where we don't know whether buyers are truly interested or not. We don't know if there's long-term holders that bought in at these levels and that are just going to continue to hold, right? So that's what I want to see is if we consolidate here, can we break back up and start building consolidation between 104 to 123 and to build that interest and the establishment of this company's trending upward? Is it going to be profitable long term? Because again, when you think about the shippers, right? Those that move back and forth when you're thinking about logistics within actually the state specifically, it's UPS and FedEx, right? There's no longer when you're taking a look at USPS, which is the United States Postal Office, it's government operated and owned. These are private sector, right? When you're taking a look at the one that's government owned, it's at its worst that it's ever been. And there's been lots of conversations along the lines of closing the United States Postal Office and just calling it good riddance because of how much money it loses the government. So in reality, UPS and FedEx are the big logistics players, the big shippers within the states currently and beyond that, right? When you're thinking about international postage and things like that. So long term, I think that this is one of those that has to survive, right? Because there's a need for it. But what are we currently doing, and why was this below 104 to 101 significant? Is that these levels that it's currently finding itself under, those were all-time highs before the COVID drop, right? This area right here, this is 2019 highs. It dropped. So you can see here, 69, 68-ish was this is around COVID lows. I mean, you can call it 67, 58. You can see this candle wick down there, but these were the absolute COVID lows. These are levels that we hadn't initially touched on since 2019, first got established there in 2018. But if we're breaking or inching uh, towards those COVID lows, these are levels that were initially situated back in 2016. So, like early 2010s is what we're looking at. And to me, that does bring pretty significant value if we're thinking about potentially entering something that's beaten down and holding for, at least for the next decade. So, if we're talking about a potential midway point here or level that we're looking for it to sustain. I have mine right around here, right? And then that's around where this might bear flag into. So a potential entry point for me would probably be right around the $85 mark. We could see the $90 mark and enter early, but that's what I would be aiming for around the $85 mark for a long-term portfolio entry. Now, moving on to the last name we have here, Estee Lauderdale, or Lauder. I don't know why I said it, Lauderdale, Estee Lauder. EL is the name that I want to also keep in mind because of how it's been beaten down. And this is our blank chart for the week. So every single week, I always have a completely blank chart that I will walk through and build out with you all from scratch, aim to just give you a better understanding of like my own thought process and what I'm actually doing as I'm looking to break down this for you all. So give me a sec here. All of my weekly levels, they're always purple. And actually, before I even start to tag up this chart and give you my levels, I'll give you like just my naked eye view of it, right? As far as what is interesting to me, why am I gravitating to certain areas? So again, what we're doing here, just to keep it bare bones, to simplify it for yourself, none of these levels you're ever going to get on the dot on the set, right? So don't even concern yourself about that. Don't stress yourself out about getting it right on the exact scent that a candle falls on, whatever it might be. What you want to do, or the purpose of putting levels and zones together for you, is to break up the chart into the ranges that it's been trading in, right? So what I'm talking about ranges are essentially the roofs and floors, the changes in direction, the changes in trend. So the most obvious trend that you see here is that bounce into all-time high, right? So that gives you one level there, one level there, right? And if I extend this one all the way, you see it's never been touched again. But if I extend this one across, you see the interest there. Extend that across. You see that there. Cool, right? So that's a range that you want to keep in mind there. Then looking at where price has changed direction previous times, you see that there. You see that there. Cool. Let's see what that looks like when I drag my level across the chart. Well, no wonder. That doesn't surprise me. We have that sort of price action there. We saw the dip below, the attempt to reclaim it, reject, reject right at it again. Okay, so what else are we seeing here? I see wick there, rejection, wick there, rejection, wick, wick, wick there. I see wick here. I see consolidation here. That might tell me that that's the level of interest, right? So what happens when I drag this around there, right? And then what do I see again? I see rejection there. I see candles there, candle there. I see candles here. I see rejection there. Okay, that might be of interest. So let's go ahead and drag that across the board there. Right. So just wanting to refine it a little bit more. What else can I see? Bounce there. Those bounce wicks there. Then it turns into rejection there, bounce there. Okay. Let's go ahead and bring that across the board there. Cool. Oh, I see it rejected there, right? And then just boom. What happens when I look across? Oh, there's a rejection there. Stop. It tried to hold here, right? And if we look lower, I see that there. I see that there. Have to bring this level across, right? Oh, that was horrible, but it's supposed to be up here. I see that there. So bring this level across, right? And I'm not going to leave it like this, but I'm just giving you a general breakdown and see how I touch there of what I'm looking for, what I'm eyeing as I'm looking at this like naked or solo chart there. So essentially, all we did was just break it up into the different ranges that it's traded. Yeah, it's pretty refined. You could essentially the actual or the bigger ranges right? Because I gave you like exact levels to trade there. But if you want even larger moves, it's where you've seen those larger changes in direction. So at a minimum, what you wanted to identify is this one there, and then boom, that there, that there, that there, that there, that here, 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 current here. You can call this one here too. Right? So it's boom, 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 boom. It's all the steps that it's taken to the downside, the steps that it's taken to the upside, right? So all I did or all I'm doing now is I'm just highlighting the changes of direction. And if I connect all of those again, it's going to give you the exact same levels that we just went through, right? So different ways to, let's have the eraser, different ways to eye that for yourself. And I just do this to again give you like the basic bare bones of what you might want to think or look for as you go through this charting process. Because one of the things that I get asked recurrently, like week after week, is or told is like I'm not confident or I'm not certain of the levels that I'm charting. How do I know if I tagged the right candle, if I highlighted the right zone? Is it the wicks? Is it the bodies? Whatever it might be, right? But in reality, what you're looking for are those changes in trend, the consolidations, the area where it gets smacked down, the area where it bounces back up. So let's go ahead and actually mark these levels now. And I'll start from the top, right? We'll just go top down. Not necessarily saying that we're going to reach this all-time high, but I'm going to go ahead and mark that because it is the all-time high range. At some point in time, we might find ourselves there, but I don't expect that anytime soon. But what I'm looking for are my upside targets if we start to see a potential reversal here. So before I even refine it a little bit more, I'm just tagging or marking up those bigger changes in direction. Do I want it here? Do I want it here? I want it there. That makes sense to me. Could mark this here, right? Given those candles, right? The consolidation it established there. And you notice I'm not even looking at the whatever the numbers here are. I'm literally just marking up the changes of direction, and then we'll go through actual target cent dollar. uh, I want that level there. I want that level there. I want that level there. And I want the low of what it touched at 548.37. Let's go ahead and that exact. What was that? 48.37. I want that exact. So that's my low. I know if we're breaking below that, it's going to be pretty significant. And I say that because that low actually was last touched back in 2012. And it was first created back in 2011. So we're looking at pretty substantial retracement. I want this here that it's currently undergoing, right? So these are the bigger ranges on the weekly that have been established. Like I said, we can refine and add more levels in between, but these are my main targets. And the reason behind, right? Because I'm not just looking at this on a technical standpoint. There is reasoning behind why I want to pursue EL. So if you take a look at companies like your Sephora, your Ulta. Those are the two biggest competitors when it comes to this specific industry, this specific obtaining this specific type of buyer in the market, right? It's a cosmetics company. It sells your shampoos, it sells your face care, right? Well, all of these different types of things. So when I think about, again, those companies that are going to continue to sell no matter what, to me, it's going to be one of these companies. If you take a look at how Ulta has performed, how Sephora has performed, even during market contractions, it's to an extent held up relatively to the market as a whole, right? Like, yes, EL has had a significant decline over the past 3 or so years now. But that decline again has been justified because of its losing market share to Sephora and to Ulta. But this has historically been a market giant, and it's one of those that has historically given out or paid out a dividend, right, to its investors. I think that overall, currently the market sentiment it's still negative, but to me it looks like it's bottoming out, and a lot of the current interest is coming from the tensions that are going on with China and like the recovery in the luxury brand demand. And I say this like luxury brand demand because EL has historically been a producer of higher price point skincare, traditionally, at least from the research that I've done and what I've noticed. So right now, a lot of this being beaten down, especially in recent weeks, it has had to do with those tensions with China and the fact that a lot of their product is being produced, it's being manufactured, it's being put together there, right? And then coming or making its way over to the States and Europe alike. So when you're talking about just the economy or the economic reasoning behind the potential to pursue this type of beaten down company, it's very similar to Victoria's Secret. It's very similar to Chewy itself. Is the current recovery that we're seeing within consumer discretionary, overall brand attention, and the fact that high spending hasn't necessarily been a complete issue at this point in time. I am looking at this as a recovery play with, yes, high risk, but definitely a big potential to bounce back within the second half of this year, specifically as we lead into summer. Again, just like Roblox sees a pretty significant influx during the summer, so do a lot of skincare and cosmetic companies, as people tend to be outside more, right? You see an influx in travel throughout the summer session or the next quarter. You're going to see that large influx. So traditionally, these companies tend to see some sort of change in their trend during these years, especially if they have been experiencing a downward trend. I think that's some of the catalysts that I'm looking for that are driving my interest is specifically that when you take a look at the earnings report for this past quarter back on May 1st, about a month or so ago now, is the fact that it beat its top line expectations. But the weakness or the tension within China, that's what lingered, and that's what caused it to remain suppressed. That's what I think is that it's being suppressed right now because of those continued tensions. But again, as summer opens up, as the travel season starts, as we start to see this influx into the airlines industry, the hotel industry, this goes hand in hand with it. So you're going to see that stimulus, especially if you see that influx within the Asian regions. And I say this because if you take a look at the predominantly where the largest consumer base tends to be for a company like EL, it largely comes from the Asian markets and the fact that they traditionally have always emphasized or taken skincare very seriously. So they are also big producers for a lot of those companies that find themselves in like the South Korean markets and things along those lines. So, without bogging you down with all of that information, those are some of the main reasons behind my thoughts or my potential trade here for shares specifically is to be able to accumulate a position in a company that's been severely beat down for about 3 years now, that pays a dividend, that has historically seen a lot of interest, a lot of growth within the market. So overall, just margin recovery and the fact that they've seen somewhat success with all of their product launches within the past year or so now. So if we're taking a look now to wrap things up, looking at these specific targets that I'm aiming for, one, to just make it very easy, I want a touch break and hold of around $83, right? This a touch break and hold retest of this 83, 85-ish dollar range. This is what's going to potentially signify consolidation for us. Being aware, though, that this is what I also had the same thought back here, right? Where you see that potential like inverse head and shoulder here. I thought that we might consolidate here, and I was very enticed or thinking about potentially buying into it here with the potential to retest highs. But luckily, we just watched, stayed on the sidelines for this. We see that potential hold here again, and then rejection. So what we want to see is, yes, consolidation in these areas, but then we want to see it break and hold and consolidate here again. And and I stop around this mark here because this will be a year out, right? So that's what I'm looking at mainly is what is it doing within this next year, specifically within these last 2 quarters, right? Heading into this time here. And why might I be interested in what it's doing, what its earnings reports are reporting between November of this year and the start of 2026. Why might that be of interest to me? Those quarterly reports specifically. Because we're heading into the holidays, right? This is
Yeah, Chris.
the Christmas. Yeah, you're right on
Yeah.
it. So when we're talking about again the summertime being a big part of the influx of revenue that it receives as travel season starts to pick up, same thing happens during the winter months, during the holiday season, Christmas time specifically. It's gift buying, right? Going out there and overall consumer discretionary, the holidays, summertime, that's when they see their largest influx. So that's why I'm really interested in potentially figuring out whether or not right now is a good buying point within the next, I'm not saying just the next week, right? But within really the next quarter is how we can potentially position ourselves in this type of name as we head into the holidays. And by the time the holidays come around, are we establishing that trend reversal? Because if we are establishing that trend reversal right around the holiday season or before that, then we've positioned ourselves really well to then aim for this right here. I'm then looking at around the 140-ish dollar mark And it's very easy, right? Why I'm aiming for that specifically is if you take a look at this range between 2017 to March 2019, it was that 2 year consolidation, right? And we didn't touch that or break or hold within that 2 year consolidation again until October of 23, and we held within that until almost a year, right? It was, what is this? Maybe like 6, 8 month consolidation with between that range. So I want to see a break back above and us establish that range or the interest within that range again. And if you're thinking about, well, what are the higher up levels? It's just steps, right? That we're seeing there. So this area here, I'm then aiming for that. I'm then aiming for that failed inverse head and shoulder breakout, right? So if you're thinking about long-term investment within the next 5 to 10 years, and then we get in here at the bottom with a trend reversal being established, and depending on how the market goes, if we get a run within these next 5, 10 or so years, I mean, it's not going to be a straight run, but these are the levels you should be aiming for: the 83, $85 range, the $135 to $140 range. Then you're potentially looking into the like 185 to 190-ish range, then the 200, the 225s, and so on, right? But we're talking about long term, right? This is not going to have, we're not going to run up to the 141 in the next month or by the end of the year, right? That's very unrealistic to aim for that type of movement based on the fact that it's not a tech company, it's not a Microsoft, it's not a Google, Tesla, whatever it might be. These will move slower, but it brings stability and it brings a dividend payment. And being that it's beat down so bad, it brings the opportunity to couple that stability and the dividend payment with the growth opportunity, right? That we didn't see here, because if you were getting in um, during the breakout of 2021 into like 2022, this was all a run up. And yes, you were getting a dividend here, but you weren't buying at the lows, right? You weren't buying a name that found itself in contradiction within its sector, because the whole consumer discretionary, the whole cosmetics industry was running as a whole. So right now, where you see Ulta and Sephora and some of these other names holding at better valuations or better, higher prices, this name I think is of value, especially when you start doing the fundamental analysis. It presents that opportunity. And that's it for what I had for you all today. You'll get more refined and specific target levels within the posts that I'll get ready within the next day or so. I'm also thinking about starting to include a little bit more info when it comes to the contracts that we're looking at, or that I'm looking at least specifically for each one of these names. I had held off on doing this so far for the past 7 weeks because of the course content material. It has focused on the fundamental analysis side of things, right? So I didn't want to start throwing out the technical or like options and all that stuff just yet, because we haven't covered it. But in 2 weeks we're making that transition, right? So next week is the last week that we solely focus on fundamentals. The week after that we start introducing the technical side of things. So feeling a little bit more comfortable with letting you all know, hey, these are the things that I'm looking for ahead of time. Now that the idea is that you should be building that additional understanding, because I don't want people to just follow because of the numbers, or to say like, hey, you said this, you said that, right? I want you to understand why those contracts are of interest and why certain companies come up and are of interest as well. So definitely want to thank you for your time. I'll stop the recording here, but if you all have any additional questions, definitely welcome them.